The following is brought to you by Digital Shelf Space, producers of GSP Rush Fit and Tour Academy Home Edition. Visit them online at digitalshelfspace.com.
Welcome to Cambridge House Live. I'm Vanessa Collette at the Toronto Resource Investment Conference. I'm joined by Chris Berry, founder of House Mountain Partners. Welcome, Chris. Great to have you here with us today.
Thanks very much. It's great to be here.
Chris, where do you see the global economy today?
Well, I think, in many ways you've got a two-speed and perhaps a three-speed economy. For a long time, certainly in the last 12 to 18 months, you saw the US, and let's just say the West, for lack of a better phrase, struggling to get back on its feet. In the Eurozone, you had outright contraction with respect to GDP growth or lack thereof. And in the United States, and I think to a lesser extent Canada, you've got a sort of a situation where GDP growth is positive, but it's sort of bumping along the bottom. And you initially contrasted that with what's happening in the emerging markets, where you've got above average GDP global growth rates in countries like China and so on and so forth that everybody obviously defaults to and has their hopes pinned on. And I think what's happened over the last 6 to 12 months is the situation has started to change a little bit. And so you've seen emerging markets slow down. China's gone from 10% to 7 to 7.5%. India's been cut in half. Brazil is in trouble, and so is Russia. And everyone focuses on the BRICS, but there are a number of other emerging markets that exhibit similar characteristics. So now the emerging markets are slowing down somewhat, and depending upon the data that you look at here in the West, I tend to look at a lot of manufacturing and industrial production data. It looks like we're bottoming out, and we may be at a turning point. So it looks a little bit more positive here in the West than it has in the past.
Interesting. So you're looking optimistically at the markets in the US at the moment?
I think that's fair to say. If we were having this conversation 6 months ago, I would say definitely not. I'm not necessarily forecasting or calling a turn yet, but I do feel like things have bottomed out here in the West. And so the question is, how and when will the turn happen, and will it be sustainable?
So do you think the greater threat at the moment is inflation or the possibility of deflation?
This is a question that I think gets tossed around a lot here at the conference, and I'm firmly in the deflation camp. When you look at unemployment data and you look at stagnant or flat wage growth in the West over the last, say, 10 to 12 years, I see huge slack in aggregate demand. I just don't see it there, despite the Fed's best intentions and the ECB's best intentions to try and resuscitate the Western economies back to life. I think deflation is a much more imminent threat, if you will, despite the fact that, again, Chairman Bernanke and other central bankers have really tried hard to prime the pump and stoke inflation. You're just not seeing it yet.
What do you think is the risk of the US slipping back into recession territory?
Well, it's, for all of the, negativity surrounding the US economy, it still is the largest economy in the world, 15 or 16 trillion dollars, whatever the number is. And it is a consumption-based economy to the tune of 70% of the GDP in that country is consumption-based. And so the fate of the US, and I think to a lesser extent the global economy, really rests with the ability of the US consumer to get back on their feet and spend. And that's not a long-term solution to, I think, what ails the US economy, but it's certainly an issue that I'm focusing on.
So there's a big meeting coming up next week on Tuesday at the Fed. What do you think we're going to see with quantitative easing?
I think that I think the taper will happen, and it's difficult to say how much or how frequently or what the complexion of the slowdown looks like. But the quantitative easing programs, whether or not it's QE1, QE2, QE3, or Operation Twist, we're just not sure if they've worked. Again, if you look at economic data in the United States, it does seem like things are starting to turn. And you can kind of take that statement with a grain of salt, if you will, if you want to. But I think the taper is real. I think it's going to happen, and I think it's because the FOMC realizes that this process of supporting the economy through bond buying cannot go on forever, because it will lead to inflation, and that's the risk.
Well, what do you see happening in the markets if, this is the case, they do end, all the easing?
Sure. Well, I don't think necessarily, if they do end all the easing, I think you're going to see volatility go through the roof. And that's why I think, Chairman Bernanke back in June started even just talking about the tapering. I think what he's been doing since then is jawboning the market and preparing us for this eventuality. Maybe it's not going to be $85 million a month anymore. Maybe it will be 75 or 65, or maybe that complexion will change somehow. But yeah, if you saw an outright, pulling of the rug out from under the economy, huge volatility. I think you'd see emerging market currencies get hit very, very hard, as they already have over the summer. I think it will be much slower and much more measured, and I think it really remains to be seen, because I just don't think we know how much of the economic growth that we've seen in the United States is organic or is due to this economic, the bond buying that we're talking about.
Let's connect the dots here. We're at, a resource investment market. What kind of junior company would survive under these kind of circumstances? Not one of the things, but the main factor that I look at right now is financial sustainability. In other words, what does the company's balance sheet look like? How much cash do they have? Is there any debt? Is there a joint venture partner? What sort of strategic alliances do they have? Again, right now with emerging market demand, which has really propelled the junior space over the last, let's just say, 10 to 15 years, with emerging market demand, again, falling, and it may be in some cases bottoming, but falling, it paints a very bleak picture for most of the space. And that's why financial sustainability is absolutely crucial right now. Absolutely. Having a strong balance sheet, having capitalization, having a lot of capital to go out there and continue to,
Absolutely.
drill.
Absolutely. You have to you not only have to have the capital or have to have the money on your balance sheet, but you have to figure out how to, for lack of a better phrase, wisely deploy it. And that's where management's capability and track record comes into place as well. And for all of the, I guess, ink that's been spilled about the commodity supercycle being over, I firmly do not believe that. I see a commodity supercycle that is changing in complexion. For the last 10 to 15 to 20 years, it's been one that has been pretty much primarily focused on infrastructure and infrastructure demand and development. I see it changing to one that is more consumer focused, the empowering of the consumer through technology, through manufacturing changes, and through also healthcare. I mean, we're in a situation where the global population on a net basis is growing every year, and things like arable land and potable water are going to become much more important.
How does this all affect the specialty metals?
Well, the specialty metals, or as I call them, the energy metals, which is what I tend to focus on, are typically small, opaque, niche markets. And so, it's not like copper, where you can look at it, you can say, okay, it's 20 million tons a year or what have you, and there's a spot market and a forward market. I think that when you look at a country like China, we'll just take them as an example because they're the 800-pound gorilla, you've had, by some estimates, 30 years of 10% year-on-year GDP growth. And just go to Google and type in Beijing and smog, and you can see what 10% per year of 30 years growth has done. It's a real environmental mess over there. And what's interesting is you've got a new Politburo over there, a new leadership, and you've also got the 12th five-year plan. And the new leadership, they're not lawyers, they're not bankers, they're engineers. So they understand environmental challenges. And when you couple that with the amount of money that's going to be poured into next generation technologies in China to make that growth more sustainable, you start to see, vehicle electrification, smart grids, so on and so forth. And that, in my personal opinion, paints a very compelling case for energy metals, copper, lithium, graphite, rare earth elements going forward.
So you still see a lot of demand coming in the future from those areas? I
do, and it's because you've seen a lack of willingness here in the West to push forward with new mines and new deposits. And even in cases here in the West where discoveries are made, you could be looking at, let's just say 10 years from discovery to production. So I still am very positive long term on the Supercycle and the energy metals in particular.
Excellent, great. Well, it was a pleasure having you here this morning, Chris, and look forward to having you back again soon. Thank
Wonderful,
you.
thanks.
Awesome. Great.
Okay.
Yeah, that was great.
Okay, good.
Yeah,
I
thank
never
you.
know, I get on a roll sometimes.
No, it's